Hey everyone, Larry Bailey here with Mortgage Workflow Partners, bringing you another weekly market news update. This one happens to be for the review of the week of July 21st, 2025. Before we get to that, please check out our new book, Workflow Before Technology. You'll find it on Amazon, both paperback as well as Kindle. Check it out. Make sure that in the chapter 1, you go to the secret URL to download the collaboration workbook that rides along with the book. Put it in there to make sure that you have these resources to help you along and really digest the concepts and put those concepts into real life practice. So check it out. Again, Workflow Before Technology, and let me know what you think. Let me know how it helps you. So let's get into what happened last week in the markets. We had home sales staying sluggish in June. The existing home sales dropped more than expected in June, while new home sales rose slightly but stayed well below forecasts. Meanwhile, unemployment claims highlight ongoing challenges in the job market. Here's what we're going to talk about today. First story is existing home sales hit a 9-month low. The next story is new home sales edge up with median prices drop, but it isn't what it seems. You got to listen to that story. That's followed by unemployment claims show it's still tough to find work. We're going to have a family hack of the week to talk about, and then we're going to talk about what happens this week. It's a pretty big week, so let's get into the first story here. We've got existing home sales hit 9-month low, and if you're checking out the visual, you'll see this graph put together through sourced by the National Association of Realtors. If you're listening to this on podcast, thank you very much. Go ahead and check out the full video at masteringencompass.com in the Resource Center. So closings on existing homes, they declined by 2.7% in June. That's compared to May. That dropped to an annual rate of 3.93 million units. This was a larger dip than the 0.7% economists had expected and marks the slowest pace since September 2024. The median home price, that reached a record high of $435,300 for the month of June. It's important to note that this figure tracks the midpoint of homes sold, not appreciation or depreciation, right? So what's the bottom line here? According to Lawrence Yun, now Lawrence Yun is the chief economist at the National Association of Realtors, NAR, quote, the record high median home price highlights how American homeowners' wealth continues to grow, which is a benefit of home ownership, close quote. Continues on actually to say the average homeowner's wealth has expanded by $140,900 over the past 5 years, close quote. Yun also pointed to long-term undersupply as a key factor behind these higher prices, inventory remaining tight with just 1.53 million homes available in June. While that's up nearly 16% from a year ago, only 1.08 million of those homes or active listings were actually with the rest under contract. So out of 1.53 million, only basically a million of those were actually active. So inventory remains well below pre-pandemic levels, as we've been saying for quite some time. This ongoing supply shortage combined with pent-up buyer demand has helped support home price appreciation. I guess that's one way to put it. Next story. New home sales edge up, median price drop isn't what it seems. So we see a graphic on here from the U.S. Census Bureau and HUD. New home contracts rose slightly up in June, up 0.6% from May. Still, the annual pace of 627,000 units was slower than expected and down 6.6% from last year. The median home price, that dropped to $401,800, nearly 5% lower than May's $422,700. But this doesn't mean home values are falling. Again, the median price, that reflects the midpoint of homes sold. So it can change depending on the types of homes that are sold, obviously. In June, there were 5,000 fewer high-end home sales. High-end means homes that are over $500,000, and 5,000 more sales in the $300,000 to $399,000 range. This shift in sales mix pulled that median price lower. Bottom line here is new inventory hit 511,000 homes at the end of June, which was the highest since 2007, which is really cool. But only 119,000 of these homes were completed and move-in ready. So you had people listing 511,000 homes, but only 119,000 could actually be moved into. The rest are still being built, which is 271,000, and 121,000 are just dirt. So while the inventory looks high, the number of homes ready for buyers today is still limited, especially given the historic shortage of existing homes for sale. Next story is unemployment claims show it's still tough to find work. We've got new employment claims dropping to 217,000 last week, marking the sixth straight weekly decline and the lowest level since April. However, a more important number to watch is continuing unemployment claims, people who are still receiving benefits after the first week. That number rose by 4,000 to 1.955 million, one of the highest levels since late 2021. What's the bottom line here? Even though fewer people are filing new claims, many who lost jobs earlier are still unemployed. Continuing claims have stayed above 1.8 million for over a year and have remained above 1.9 million now since mid-May. This points to a job market where it's getting longer to get hired and available jobs just aren't keeping up with the number of people looking to find work. Family hack of the week time. So again, if you're listening to some podcast, head over, if you're interested. This is the National Ice Cream Sandwich Day. It's August 2nd. There's no better way to celebrate with the summertime than a homemade white chocolate chunk cookies from Food Network. So you're going to use those to build your perfect ice cream sandwich. Check out the recipe here over at masteringcompass.com. And it sounds really good. Check it out. Here's what we're looking for this week, gang. We've got a very busy calendar, including more housing data with appreciation figures on Tuesday, pending home sales Wednesday. The economy is also in focus, of course, with the first look at the second quarter growth GDP. That's happening on Wednesday. And dominating the news, of course, is going to be the Federal Reserve's preferred inflation metric. That's the Personal Consumption Expenditure Index on Thursday. We've got labor market updates spread throughout the week, including job openings on Tuesday, private payroll numbers on Wednesday, unemployment claims Thursday, and the main jobs report featuring non-farm payrolls and the unemployment rate Friday. In addition to all of that, probably dominating the news besides trade deals is going to be the Federal Reserve's holding its two-day policy meeting starting Tuesday with the interest rate decision and press conference expected Wednesday afternoon. Of course, lots of folks that are hoping that Federal Reserve lowers interest rates. As we've been saying forever, short-term rates are not directly tied to long-term rates. As a matter of fact, there's been a bunch of people who pointed out every time the Federal Reserve has lowered short-term interest rates, long-term rates go up because people are afraid of inflation. This trade deal that just got signed apparently with Europe is now got a 15% reciprocal tariff on both sides. So, I mean, how does that not lead to inflation? I don't know. It's got to, right? But I guess we have to see the data, which is what Chairman Jerome Powell has been saying now forever. And so generally speaking, it's a very, very high odds that short-term rates are not going to be reduced because, well, it's July. If these deals are here now, it's probably going to take 4 or 5 months for those deals to sink into the economy. Somebody's making 15% less, or if prices need to go up 15% higher, it just doesn't make sense if inflation doesn't go up. But again, who the heck knows? My name's Larry Bailey. I run Mastering Encompass Community. I run Mortgage Workflow Partners as a company. We're here to help anything that you can think of when it comes to putting workflow before technology. That's us. We'll see you out there. Take care.